You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is, well, there's only 3 days left till the end of the year. What a year it was. The return to non-normalcy, I would call it. Well, let's take a look at what has happened in the past year and what about the year ahead of us. Our good friend, Jerry Robinson, followthemoney.com, is with us now. Jerry, Merry Christmas, Happy New Year. So what a year it has been, huh?
It's been a great year in some ways. In some ways, it's been a tough year. But either way, it's over now, isn't it? We're heading into 2022, so we're looking forward to it. It's great to be back on the program, by the way, Kerry.
Hey, always. Well, for me personally, it's been a great year in so many ways. New grandson came, new home.
Congratulations.
Yeah, business been pretty good. Can't complain about that. Everything has really fallen into place. And I've personally had a wonderful year. So if 2022, you really have to be your own best self, live your best life. If you can do that, then whatever is happening in the rest of the world, short of them blowing up your block, doesn't really matter.
Well, I'm glad you had a good year. I've had a very good year too. I mean, everything from, relations, health, finances, it's been a really good year. But who knows what's ahead next year, but I'm positive and staying positive.
Hey, well, health is the most important thing. And I started out the year, literally, I got out of the hospital on January 3rd after having COVID. It took me about 2 weeks to really return to normal. Again, I felt like, my body was in shock. And then after that, kept the weight off, changed my diet, got back into exercising like I was, and life has really been good. Sometimes you need that close brush with death to really make you appreciate things. And, we might be in for a near-death experience as far as the economy is going or not going. Looking back on the past year, what do you think were the high points and the low points?
Oh, wow. Well, I think if we want to zoom in right on the topic of investing in money, which makes sense here for the show, I mean, I would say that obviously the Powell pivot was a highlight of the year, right? So the Federal Reserve recently doubling its taper, signaling 3 rate hikes for 2022. Some banks wanting more than that, some banks calling for 4 rate hikes, others suspicious if we'll even get 2. I think the inflation story, which we wrote about in our book, Bankruptcy of Our Nation, we have a chapter called Inflation Nation. We talked about how important it is to understand what inflation is. And all year long, Kerry, from the mainstream press, we've been hearing that this inflation couldn't be that we've dumped tons and tons and tons and tons of freshly printed money into the economy. That can't be the case, Kerry. It can't be from that. It has to be the businesses who are just, driving up prices because they're insidious, because of their insidious nature. And they just want to, and of course some businesses do, let's not joke around. Some businesses are insidious, but the point is that inflation is not when the merchant chooses to raise prices. It occurs much well before that, whenever the central bank turns on the printing press or types in keystrokes into a computer, perhaps to be more accurate. And I think inflation obviously has been a major, major theme this year. Of course, everybody has woken up to that fact. We are facing 3-4 decade highs in inflation just based upon the official numbers, Kerry. I mean, of course, if we look at unofficial numbers, they're probably much higher. And I would suspect as we go into 2022, I think one of the strangest things that occurred this year, Kerry, and I know you know this acutely because you've been following this market, but the gold and silver markets, even though they did have a really interesting beginning of the year, when the inflation headlines really began to accelerate, gold and silver failed to respond, which was so very interesting to me, because again, I've been a long time investor in gold and silver. It's a part of my portfolio. I view it as insurance, not as you'll get rich quick stuff, but I keep it in my portfolio. But the point is that what a strange year that was when it comes to gold and inflation. I don't have a whole lot of answers for it, quite frankly. I'm still in the reassessing, what's going on here, but I know some people have a ready answer for that. I don't. I do suspect we will see more upside for gold and silver as we move into the new year. But I think the lack of response by gold and silver in the middle of the most crazy inflation headlines that we have seen in decades speaks something. I'm still trying to learn from what's going on here, but I'm a little surprised. I'm surprised that gold didn't close the year above 2,000. I'm surprised that silver didn't close the year above $30. But then again, Kerry, just to close out that idea, is the fact that thank goodness I don't have a crystal ball, or thank goodness I don't act like I have one. So I've been diversified across the board. So many things went up, Kerry. For example, here at followthemoney.com. Our number one smart score ranked stock all year long was Google. I mean, when we rank all of the stocks according to our smart score ranking system, and Google was on the top, number one all year long. Had you just invested in Google in 2021, you would have earned about 70% or so. I mean, an incredible return from one of the largest stocks in the world, and Google was on the top. So it was an interesting year for sure. Being diversified was very wise in the year of 2021.
Hey, well, what about stock like Tesla? I mean, I'm not putting down your Google's selection by any stretch, because it was an outstanding performer. But a Tesla, what does that tell you about what the market's doing?
Well, Tesla is a huge play on the future, and I've been a big fan of Tesla for some time. When I look at our smart score rank system right now, Tesla, it's funny you ask, it's number two. It's number two in our system. It's been in the top 5 all year long, but it's number 2 right now, up about 43% year to date. So Tesla is hot. Google, or Alphabet, whatever you want to call it, that's been the top ranked stock all year long.
Facebook's in that top ranking in the stocks too, I assume.
No, Facebook's not, surprisingly. It's not in the top 20 that we have here, ironically. Intuitive Surgical is up there, ISRG. That's been a really interesting healthcare stock. Very, very interesting. Fulgent Genetics is way up there, 100% returns. There were a few healthcare stocks like Apollo that went up like 300%. Wow. But yeah, I mean, when we look out to 2022, we're excited about several themes. I still believe that crypto is probably not going to peak finally in this cycle, Kerry, and probably until Q1, maybe Q2. The cycle keeps lengthening. Every time the halvening happens, you get a longer cycle and a little more shallow cycle. So I'm thinking maybe Q1, Q2 before we see the peak in crypto. I still suspect that commodities will have more upside in 2022, maybe not the incredible upside we saw in 2021. And then when it comes to broader stocks, we like to stay diversified. We're actually unveiling a brand new model portfolio this year for all of our members. It's called the Smart Score 11. And we're going to include the top stock from every single of all of the 11 S&P 500 sectors, energy, tech, all of this. And we're going to be releasing that for our members at the beginning of the year. We're really excited about that because I think in this environment, many people are like, do I invest in growth stocks or do I invest in value stocks? There's a lot of questions. I think, quite frankly, Kerry, it's quality. You invest in quality stocks. If you're going to be in the stock market, invest in quality. If you're going to be in the crypto market, invest in quality crypto projects. If you're going to be in the mining space, invest in quality mining projects. Quality is more important than growth or value, I think, at this point. We just need to focus on high quality assets. And if you have a diversified mix of high quality assets, you're very happy in 2021.
Yeah, for sure. So, yeah, I was a bit surprised about precious metals underperformance. But on the other hand, we know look, if they can control one commodity, they can control them all, right? Everything is manipulated. There's no longer markets. There's only interventions, right?
Well, yeah, I would say to a certain extent, you couldn't argue with that. I mean, the idea of free markets in the United States, at least when it comes to the financial markets, is pretty absurd. we've talked about that in the past, how ridiculous it is that one political party acts as if they're pro free market. There's only one political party, in the country that's pro free market. And we all know who that is. And of course, the answer is no, we don't. No, we don't actually know which party that is, because neither party seems to understand that there's free markets or cares that there's free markets. So yeah, we saw the biggest intervention in world history in the financial markets underneath a Republican Senate and a Republican White House. The largest intervention in world history. There's never been a greater intervention than what we saw in 2020. And it wasn't even because of a financial collapse. It was because of the fear of a financial collapse. It was incredible. It was the most incredible intervention we've ever seen. And it didn't come, from the usual suspects, or it actually did, I think actually it did. It came from the usual suspects. The R's and the D's are.
There's only one.
If there's one other thing that if there's one thing they agree on, more than war, which they certainly agree on war, it's pumping money into the system to make the system better, and that's what they're both good at, apparently.
This is so true. Well, politicians, how do you know when they're lying? Because their lips are moving, right?
That's right.
Yeah. So looking ahead, we've got this kind of crack up boom. We've got the inflation firmly in place. I think, I got a couple of years on you. I remember vividly the 70s, the last inflationary cycle we had. Once these cycles get started, very, very difficult to stop them. It really takes some decisive action and a complete reversal of reckless monetary policy, which nobody seems to really care about. Once upon a time, they actually pretended to care about debt and the deficits and all of that. But now under modern monetary theory, they've learned they don't need to care until they have to care about it, right? Do I have it right, Jerry?
That's sort of, I think you're pretty darn close. I think it's probably more that they do care about it when they're not in power. So right now, for example, with Biden in office and a democratically controlled Senate, thanks to the vice president, now we're hearing the howling about the Democrats spending so much money. They're bankrupting our grandchildren and we can't afford this and we can't afford, to spend money. Now, remember, just a couple of years ago when the Republicans were in power, it was Katie, barred the door. They were literally pumping in as much money as they could find, right? And by the way, pumping in as much money as they could find, Kerry, meanwhile telling us that the COVID-19 was fake. Right. So on one hand, you got a fake disease, right? And on the other hand, they're pumping in the most incredible amounts of money you've ever seen to fight a fake disease. You just can't make up the Three Stooges kind of, comments that come out of Washington. It's just simply incredible. But they're always trying to cater to us, We end up being the boss in the end. You and I like to blame the politicians, but we're the ones who vote for them. We like to blame the corporations, but we're the ones who buy junk from them. So, in the end, is it really the public officials' fault? Is it really the private officials' fault? It might be the fault of the people, right? We're the ones who keep putting these same people in and empowering them with our dollars.
Mm. Well, the road ahead is going to be a difficult one because eventually there's going to be this day of reckoning. I just don't think really it's going to be the coming year. I think we've maybe kicked the can down the road for the last 18 months or so. It's just not going to be able to be kicked down at some point. What's your thoughts on that?
Don't just survive, thrive. The Financial Survival Network.
American Eagle Gold is focused on exploring for a world-class gold deposit on its flagship property, Golden Gate, located in the Cortez Trend next door to Barrick Gold and Newmont Mining's Gold Rush and Cortez Mine. They have produced over 27 million ounces of gold. The company plans to drill and advance its relatively unexplored property and continue to focus on acquiring and advancing gold projects in the area. Vice President of Exploration Mark Bradley was at the helm of the team that discovered and defined Gold Rush and has spent the better part of 30 years working on the Cortez Trend. American Eagle trades under the symbol AEG on the TSX Venture. For more information and to sign up for notifications, go to AmericanEagleGold.ca.
This This is the Financial Survival Network, the information you need to thrive now more than ever.
Okay, so when we were in 2009, we were just coming out of the 2008 crash. I didn't know how long the Fed could keep pumping in money, and I didn't know how long people would believe. And it turned out that the Fed kept pumping in money for longer than I had expected, and the people kept believing it longer than I expected. So that's okay, because I didn't, bet the farm or anything. But I was somewhat surprised by the length and the duration of what the QE1, QE2, QE3 was able to create. Okay, so with that said, I got a call from a group of financial advisors at the beginning of 2020, right after the election, 2021, I guess, right around that time. And yeah, it was the beginning of this year. And the question was, what's going to happen to the market? And of course, I don't have a crystal ball, but just using what I have seen from the past, several decades, I told him, I said, I think we are in a 2009, 2010 environment, and we could go on for years. The reason is because the amount of money that was pumped in back in 2008, Kerry, as you well know, 2009, 2000, and it's just piddly squat compared to what happened over the last 18 months. I mean, just nothing. So for that reason, think about the sugar high that we got. We got a nice, nearly a 10-year rally out of that 2008 juice. What are you going to get from this 2020 juice? I mean, how long is this going to goose how long are they going to goose the market? So, and like you said, the Fed is going to double its taper. It's supposed to do this in January. It's also going to supposedly raise rates 3 times next year. But this is all talk. The Fed doesn't have to do anything. It's just telegraphing what it might do. And so I suspect with you that to not think that asset prices are going to continue to rise this year might be a mistake. We might be in a fairly long cycle here that takes prices, what we think now are high, to extreme, absurd evaluations before we then have another, crash. It's just the boom bust cycle, and it just keeps on going on because of the central banking schemes.
On steroids.
Steroids, yes, indeed. So I wouldn't be betting against the overall market just in 2022. I wouldn't think that the end is here and end is nigh now. I think, in fact, as you pointed out, the Fed is probably going to back off if it senses that the market is pulling back. Because remember, the Fed's number one goal is to insulate investors from economic reality. That's really their number one goal. Because if they lose the investor class, then the consumer class is in major trouble. They got to have somebody to buy the bonds. They got to have somebody to prop up the system. And so they got to save the investors. And that's what they did. They didn't save the savers, that's for sure. And they did try to save the consumers to a certain extent by sending them checks. But the main thing was that they bailed out the investors, right? They bailed out the investors and said, look, don't worry. Just keep investing in the stock market, and we're going to keep bailing you out. And people stayed. And in fact, not only did people stay, Kerry, people who had never invested before were like, you got to be kidding. I'm jumping into this market. The Fed's just going to bail it out. Well, heck, I'll just hop in. So we have all these new millennial investors now. We have all these people who have never seen a stock market crash, or they've never seen one that lasted. We may be in for a long, long ride up. I suspect this may be a roaring 20s decade, potentially. And if it is, then we've got a long way to go. And 2022 could be just one of the opening years of this sugar rush, this artificial high that we're going to have.
Yeah. So like when I look at it, I say real estate, but income producing assets, when you can leverage them and get cash flow off of them, it seems to me to be a no-brainer here, Jerry.
Real estate's one of our favorite spots. We put, almost half of our total investable assets in real estate, specifically affordable real estate, affordable housing. I like that space a lot. And in fact, speaking of real estate, when you look at what happened in the stock market over the last year, it actually is REITs, and specifically like for example, the ETF VNQ, that's the Vanguard Real Estate ETF, holds around like 170 REITs. And these are real estate investment trusts. They have to pay back at least 90% of their annual income as dividends to shareholders and all of this. They meet these certain requirements. Well, anyway, they pay out pretty nicely. And if you look over the last year, 2021 year to date, as we do this recording here just a few days before the end of the year, the S&P is up about 29%. The NASDAQ 100 is up 29%. And the Vanguard Real Estate ETF is up 38%. That's on top of the big fat dividend that it pays. So REITs have been a real hot space. We like American Tower as a REIT. We like Public Storage a lot, PSA. We also like Realty Income, ticker symbol O, which is the monthly dividend company. There's lots of great REITs out there. There's lots of good opportunities, I think, in real estate. But real estate had a great year. It rocketed higher in 2021 and certainly outpaced the broader markets. So real estate was hot. May not have the same year this year because you had so many companies returning to profitability or opening their doors again or whatever. See, it was just kind of a perfect storm there. But this year we would still suspect to see, more gains ahead, certainly in the industrial side of real estate. The self-storage space was an enormous space. And some of these are the most obvious. I mean, when you think about self-storage in the United States, you know that it's a hot market. But when you look at something like PSA, which is the leader in the space, they're up, like I said, 63, 73%. Overall, self-storage REITs were up about 80% in 2021. So yeah, real estate's a fantastic space, whether you're going through the stock market, which is not as preferable as just buying an outright good quality properties. It's a great space. People who have their diversification across real estate, a little bit of stocks, a little bit of commodities, a little bit of, crypto, a little bit of their own business, you just got to mix it up, keep it mixed up, keep it high quality, and you'll be all right. You'll be all right. If you go all in though, on that microcap stock, because you heard about it on, some podcast, or you go all in on some, or Reddit, even worse, right? Yeah, you're in trouble. And I think that's the same, like AMC, for example, and GameStop. Some of these we're going to see some crashes for sure in 2022. I would bet against those if I was going to be betting at all. But broader stock market, I think you're probably going to see more gains ahead in 2022, if I had to guess.
I'm inclined to agree. So if you can leverage an asset, and it doesn't necessarily have to be real estate, but obviously affordable housing, whatever, if you can leverage an asset, get a cash flow that will react to inflation. So there's other types of assets that you can do where you'll earn returns as well. Then the inflationary environment is really going to be one favorable to you. One of the most amazing things that I've ever seen in my lifetime of watching the economy, and I've been watching it since I was in my early teens. I mean, I was kind of like an outcast kid, so I had nothing else better to do than to watch the stock markets. But
all right,
the idea that a car that you buy can become an asset and be worth more than what you paid for it. All right. That turns on its head, Jerry, like so much of what we have learned in life. The worst performing asset you could ever buy, in fact, it's not an asset, is a automobile, right? Automobiles are like useless. Mm-hmm. They lose value instantly. They are completely, to be avoided. Never buy, like my thing was, hey, buy late model used cars, let somebody else pay for the depreciation. Now to think that we're living through an era where basically, where used cars become worth more than what you paid for them. That to me is one of the most shocking things that I have ever seen in my life here, Jerry. I never thought I would live to see it.
It's very bizarre. I got a call. We bought a vehicle just before COVID struck, just right before. I think it was like the month before even. We got a call from the car lot that sold us that vehicle. And it was a year old, kind of like you. I agree with you. I don't like to buy a brand new car off the lot. I would prefer to buy 1 year used or so. But anyway, they called us and they were offering us, like you said, $5,000 more than what we had paid for it. And this was a used vehicle, so I thought this is very absurd. But that has to do a lot with, that particular situation has to do with the semiconductors and, all this other stuff. They halted production. But, if you're going to buy a vehicle, some people are really into vehicles and you can actually make that work. If you focus on buying classic cars, or we have a couple of members and students in our community who focus on that. That's one of their niches. Instead of going, heavy into oil or some other commodity, they like to enjoy the commodities that they buy or the assets they buy. And so they'll buy, older cars that do go up in value. So there are some cars that actually go up in value, but they have to be older and you got to know what you're doing. So, that I like that space. The same thing can be said for wine. The wine market's really interesting. Art is but you really got to know what you're doing. Diamonds and jewels. I started investing in diamonds through NFTs in 2021. Really interesting stuff as with the NFT market. But yeah, there's so many different ways that you can invest that it just behooves people to, stay within their wheel of competence, focus upon what you know, and diversify within that area. Diversify as much as you can and be wise with what you have. It's been a wild year. It's been a wild year. Who knows what 2022 ultimately holds, but financial wisdom is certainly a way to get through it better than without it.
Yeah. I mean, I think that's the end. Keep educating yourself. Don't let the masses or the people dissuade you from what you know is right, what you believe, but always keep an open mind because things can change really quickly. Hey, Jerry, really appreciate you coming on. And if you want to follow Jerry, followthemoney.com. How else do we stay in touch with you, Jerry?
That's a great place to go. Followthemoney.com. You can sign up for a free e-newsletter. You can listen to our podcast. You can view our 5 levels of financial freedom. There's tons of free stuff on the website, followthemoney.com.
All right. Hey, well, we always love talking to you, Jerry. Best wishes for the coming year to you and your family. Let's all stick together here and help everybody get through it. These are really tough times. Even those, I always say, Jerry, in any economic crisis, catastrophe, there's winners, there's losers. You make the decision which you're going to be. And hey, if you got a question for Jerry, shoot me an email, kl@kerrylutz.com. And I wish you, and like I said, yours the best, Jerry. We'll talk to you again next year.
I really appreciate you and your work there. Thank you, Kerry. Enjoy being here.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.